Attention audience, the rest of this evening's updates will be based on your subscriber request. Comment down below in this video for any and every crypto you want me to cover this evening. That's once again, any crypto comment. Vincenzo'S Go Crypto Investing, and we got some more updates that the subscribers have requested. And the first one is XMR. And we're going to take a look at XMR real quick. And you can see it seems to be a fairly new coin, but there seems to be enough data to kind of look at the coin and see what it's doing. So of course, we're always going to start with our volume indicator. And you can see we've broken above our major resistance on our volume indicator, which we're going to mark down here. And this is going to be indicative of the last line of defense to the shithouse. So we're going to make it orange, and then we're going to lock it, right? And now we're kind of up here coming up to the 100-day moving average. But in the daily time frame, it's such a new coin. There's barely enough data to get that in. But you can see we're going to mark this in white, as this is a major resistance zone up here, and we're going to lock this. And then I'm going to take a fib circle. Oops, not the arrow, the fib circle. And we're going to go from a swing high, or a swing low, to a swing high to current price, or time frame right there. And you can see this is going to give us a nice area of upper resistance. And you can see right now, look how beautiful that lines up. You see how we're climbing along the orange ring right there. So this is going to give us some areas to watch for support and resistance, right? And you can see right now where we have a big area of support and resistance would be the 50-day moving average, or right up here. If we stretch that out to where the 50-day is going to be, or the 100-day moving average, that's a major resistance. And then if we look at what we're doing kind of pattern-wise, you can see we were in sort of this falling channel, right? We had upper resistance right here, then we had upper resistance right there, and then if we would have just drew it straight down, right, you can see that. You got upper resistance, support and resistance, resistance. See that right here? Three nice forms of contact. And then if you were to take a lower one and do the same thing, you can see you got some support, and then support. And if you draw that out, you can see you're in a falling channel here. You see that? Where you had support and resistance on the falling channel. We'll do our industry exclusive perching tool. Resistance, tried to hold it at a support, failed, flushed down the support, couldn't hold this old resistance as new support, resistance, a breakout, right? And now a technical target out of this falling channel would actually be up here at the top of the channel, right? This would actually be your technical target up here, right where this big volume candlestick is. See this? Right up at the top of the channel would be your area. That's your technical target up there. So what I'm watching for in XMR is the volume starting to decreasing, which is bearish, but we're continuing in a mini uptrend here if we go to the 4 hourly. But you can see how you're riding up this. What I would look for is the volume slowly decreasing as the volume is up and sideways consolidating. That often signifies that this may roll back over and come down to the 200-day in the 4-hour time frame. See that 4-hour time frame that's sitting down here. So I would watch if this breaks much below this uptrending fib circle that it's been straddling. that you might come back down to the 200-day. So we're going to put a little price note in there in the 200-day today's at about $135. Oops, didn't mean to move that. See, that's what happens when you don't lock it. We'll have to go back and make sure that's in the right spot. So in the short term, I'd be watching out, and if we zoom into a closer time frame, you'll see it better. If you break following this orange fib circle right here, you're going to drop down probably to 135. But if you keep running up the fib circle, you could come all the way up in the next few days, right? You could come all the way up to the 165, and then your major upper resistance is up here at 180. But right now, this is sort of a localized pump right here. So you could even draw on the shorter time frame. You can get to the hour time frame to get more data points. And you can see this, I mean, quite clearly. You're in a big rising channel from the bottom since you started this mini uptrend. So these moving averages would be what I would be looking to stay bullish. As long as you stay above this 200-day moving average, tap it and you hold it, you're bullish. But if you slip this 200-day, you're going to come back down to 126 and then maybe back down to this old breakout point of 116. And to remain bullish, you want to stay above these moving averages. And then on any kind of big upper overreaction pump, your major upper resistance, this is the 100-day average in the daily time frame, would be upper resistance there. And then your major upper resistance is this $186. But I would be watching out where this 200-day or the 100-day moving average is in the daily time frame, because that runs you about right up into here, where you had major old support and resistance at the 168 level. So your initial short-term major resistance is up here at the $160 level if it continues up, and your lower support level is this $135 200-day uptrending moving average that you need to hold to stay bullish. If you fail to hold to stay bullish there, you would trade back down to this old breakout point, either the top part of the orange support zone, or more than likely this orange fib circle underneath and this yellow descending line on the falling channel, which is down there at about $110. So that's what we're watching out for in XMR. DAG, I believe this is another coin that somebody wanted. We got DAG, and you can see we've actually looked at DAG before, surprisingly. I didn't think yeah, we have. Wow. Oh, that's Bitcoin. What am I talking about? How'd that get to Bitcoin? DAG. Yeah, see, we've looked at this too, Bex. Someone somewhere along the line wanted to look at this. You can see DAG consolidation. You can see we have that area marked with the volume indicator right here from the last time. We can get rid of that. From the last time we talked, because the price was way up there. And you can see we were in a big rising channel. And a technical target on a rising channel is all the way down here at about the 0.007 cents. But right now we're getting supported on this volume candlestick. As you can see, when the price was up here, see that when the price was up there, this is kind of cloudy. Let's get some of this bullshit out of there, get rid of that. We got too many price notes up there. Get rid of that price note. And then we got all kinds of blotchy circles that we were looking at before. Let's get rid of these. Let's get rid of, come on. Get rid of that shit. Fuck. Get rid of that. And then get rid of this little arrow there. All right. You can see when we were up here in this rising channel, or rising wedge, right? When you broke out of there, you can see there's very little volume up here. And the reason we highlighted this candlestick, because there's a lot of volume that sticks its nose out of there when there's no volume up there, right? And you can see now, when you've come down, percentile-wise, you've fallen pretty quickly through from its all-time high, 84% at current price from its low, and 81% at current price. But you fall right down to where this volume indicator said there could be some trading and a bounce, right? So what I would look for in the short term is this maybe to trade up, if it can get above this orange zone, trade up to the 200-day moving average, right? Let's get rid of some of these old ones. We got some more nonsense right there. Maybe trade up to the 200-day moving average in that daily time frame, which would be 12 cents. But I'm thinking long term, this is going to come all the way out here. I think eventually, just like we came down there, I think we're going to come down to your major volume area down here. And I think long term, your next major move after this bear market rally is you trade all the way down towards this green ring in the 0.01 cents. But in the short term, I would be looking to see how this interacts right here with the 100-day moving average in blue and this old pump right here at the top part of this orange support zone. and either A, you're going to get rejected and start to trade back down, and then that would be indicative of something that's going to eventually break down to this next underneath target to where I think you're going eventually down there. But if you get a little bullish, you can make a nice run up into this 15, maybe 15.5 cent level, right? Or 15 cents up there. Yeah, you could get up to 15 cents. But between this 12.5 to 15 cent level, you could make a pump to in the short term, but you got to stay above this yellow line that's sitting at about 0.069 cents, and you got to stay above that and then get above the orange support zone, right? If we zoom into the hour time frame, see how initially you've got rejected up here at the top part of this orange support zone. See that? You see how you beautifully got supported down here by the bottom part. Then you got on top of this yellow line, the volume indicator range. The reason we marked this a while ago, I don't even remember when we talked about this. And now you've pumped above it on a pretty good pump, but you're coming up initially to this upper resistance, and that's textbook to come down and retest the moving averages. And if you can hold the 200-day as it uptrends like this, and you hold support on it, it can force you to the upside, and you can actually break this major resistance area and then move on up to that upper target that we marked down at the 15, 16 cent range, right? Which is right up here. We got to get it over. At the 15, 16 cent range up here, you can make a run up to here, not that high. Where's the 15 cent? It was right about in there. You can make a nice run up to there, right below some major upper resistance at 28 cents, right? So that's what I'm watching out for right now. This about 8.5 to 9 cent level. If you can break that, you can make a run up to 13 cents. If you fail that, you're going to trade back down into this consolidation. And as soon as you break that and breach this old low on the flip side, when it starts to eventually trend down, you got a big fall, because I think you're going to eventually in the long term come down here, because that's the bottom of the channel, and that is a technical target out of the rising channel and DAG that we're in. And then LCX, we had a subscriber requested update. I don't believe I've ever looked at this coin before, so we're going to go out to the daily time frame, and this is a very new coin. Nice. So we're going to first see we have some major overhead resistance, see that, and then resistance. You can even put it like that, but we're going to say it's somewhere like this because we have several points of contact like that along the way. And then you can see it straddled it as upper resistance. So you've broken out of that. Then I'm even going to put a fib circle in here from its swing high to its swing low to current price. See that? Look at that. Swing high to swing low to current price. And you can see this can give you some kind of major upper resistance up top, but I'm not liking where that's at. We're going to go from, not the whole history, we're going to go from a different swing high. See that? We're going to go from right here after this fake out right there, and then we're going to bring it down to a recent low and then bring it over to current price. And you can see how well that works. I like that better. And you can see, just like the other coin, we're straggling up that upper resistance on the fib circle with a lot of sell pressure, right? And then we need to put our volume indicator on here. And that's going to give us all the dirty details that we need. So the VIX volume range profile, you're going to go from the beginning. We'll bring it down here to keep it out of my way. And you can see right here, most of the volume's been traded up here. And this is probably the major area that you're going to target next, are these two candlesticks up here, and these are going to be your major overhead resistance, right? And we're going to go ahead and lock that in there. This would be your major overhead resistance on this pump right up in here at the 0.0973, and that's going to act as heavy sell pressure because it's going to act as bearish when you're trying to come up from the bottom side. And to get bullish, you would have to get above that. Notice how the 200-day and the daily time frame is sitting right next to this. This is the mean of the volume, and this is where your major upper resistance is going to be if you continue to pump, right? And if we zoom in from the daily to the 3-hour time frame, you can see so far it's getting rejected every time it hits this orange fib circle, but it's getting supported by the short-term moving averages. And this coin, LCX, is much like DAG consolidation, or I believe that's what the coin was called as last time. You're running up against this fib circle right here, and it's acting as resistance. But as long as you stay above these 200-day moving average and the conglomerate of moving averages right here, you can continue to remain bullish and try to make a run up to major upper resistance at the 0.09 cent level Let's move that over here to put it more into the current time frame. 0.09 3/4 cents. Oops, see, this is why you always have to lock this. This was down there, and you got to lock it or else it always wants to move on you. As long as you can remain above those moving averages, you can continue bullish to the 0.098, which where I would imagine heavy overhead sell pressure would be. But if you get rejected by these fib circles and the overhead sell pressure that's currently there, you would trade back down to the underneath support, the falling, depending on when you hit it, this falling channel or the orange fib circle below it at a descending fashion, right at about the 4.5 cent level, because you can see what we've done is we were in a falling channel, just like the last one, the last coin, and you can see there's your overhead resistance, and then you can see your underneath support. You have support, 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 and then if we drag it over, support right there, right? Relax that line down a little bit. It's something like that. Looks beautiful with a couple of fake outs to the down and upside, and then you would come back down if you fail to hold those short-term moving averages in the 200-day time, in the 2-hour time frame, right? Oh, don't do that. If you fail to hold that in the 2-hour time frame, what I'm trying to get back to over here, you can see you would come back down to that initial underneath support, right, on that orange fib circle and the descending yellow line, which on today's price, it would be, it's uptrending. So it'd be about 5.5 cents. And then you would have your next lower support down there, which would be on today's price, the fib circle down here at 3.25 cents. And then you would have the underneath falling channel support down here at 2 cents. So that's what I'm looking at right now. You got to hold these short-term moving averages in the 2 and 3 hour time frame to remain bullish. And as long as you hold those, you remain bullish and come up to 0.098 cents. But if you fail to hold that, you're going to initially come down and back test this major underneath support that used to be overhead resistance, right? You can see if we scroll back, resistance, resistance, see that? Resistance. And if we scroll over, you had a whole slew of resistance, and it straddled it for several weeks right here as upper resistance, and then it broke down, see that? And it broke down and came straight back down to lower support, had a V-shaped recovery, traded sideways, and then blew up here as a fake out, because when it came back down, it back tested it and failed, and then got supported on the orange ring, and that's what's catapulted it up now ever since then, trading on that underneath orange ring. So if you see how the pattern's been going, right, see how it failed to hold on its back test. What you would have liked to see here is when it came back down, it held it and then started to trade up. But what it did is it had a little bounce, and then it failed to hold it, and it came right back through, and that's how you knew it was a fake out, right? And that was all the way back here at the beginning of June, and now we're getting back here at mid to late July, and we're peeking our nose out over it again. So if we fail this short-term moving averages where it's circled there, your likely solution is you got to come back and back test this again, and then if you can straddle it and hold it and kick back up, then you've confirmed that it's a breakout. But if you come back down and you hit it like so, do a little bouncing, and then slip right back through it, you're confirming it as a fake out. So that's what I'd be watching out for. With that price right now, like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.